Lisa Bloomfield, welcome to The Real Build. How you doing today?
I'm doing well. Thanks for having me here, Bill.
Yeah, I was excited to have you on. We connected on LinkedIn and I saw what you do. And I've been wanting to have somebody on my show in your profession for the longest time. And with tax season right around the corner, obviously you are busy, very busy, I'm sure.
Right.
So, so I was glad that you took your time today. I really appreciate that. What I always like to get started with on this show is obviously your background. So, who is Lisa Bloomfield?
I've been in accounting for 25 years. Got my very first job with a CPA when I was 19 years old. And during part of that was back when QuickBooks was just coming out. So the CPA who had hired me is like, there's this new product and I'm out of the office a lot. So he like slides this box with this huge instruction manual. And he's like, would you like to play with that? The rest is kind of history. Once you've worked for a CPA, you tend to always work for CPAs. Like once any of them see it on your resume, like they immediately call you back because it's a different kind of specialty. And so I have worked in government accounting. I have worked in small business with in Texas and in California and in Utah. And so I've been in quite a few of the public accounting realms as well as doing that government accounting. So if you happen to want to start a city, especially in Texas, you let me know. I can hook you up with not only resources, but can probably help you out with
that. That's pretty cool. Yeah. I don't know if I want to start a city anytime soon, but hey, I'll think about that definitely in the future. You know, I might want my little own city to build in and so on too, you know?
Yeah, it's got its own special little drawbacks. So
yeah, there you go. Let's go into this a little. So why, let's dive deeper into it. Why did you choose to be an accountant or be a CPA over any other career that you could have had? What led you to that? Was it where you explained it a little bit? Let's go deeper there.
I really honestly hadn't ever thought about it much. I didn't really know that a CPA was a thing that was out there. I knew that my father owned a business, and so he was very much into, he had an accountant, and then there was this guy who did my taxes when I was 16 years old. That's what I knew that person existed. But I hadn't really got into it. I wasn't, everyone always asks, you must be really good at math. No, but I am really good at puzzles, and counting is I find more puzzles than math. And so then there is this desire when I get into school, finding something that's more office related. This was the early 90s, and I'm more interested in kind of having a job that'll take me into that office career. And as I am pursuing that, I find this office for a CPA. He taught me a lot about tax. He taught me a lot about accounting. And that was an extreme interest level because it just really clicked for me. I've mentioned to numerous friends and family over the years, I'm like, if your teen graduating high school isn't quite certain what they'd like to do, go out and find different jobs, find the things that click with you, and you'll find it. Like if you don't know what it is, it will come find you. And so just keep trying and just keep finding new jobs and, different stuff like that. So I actually really love the putting the puzzles together, making all the internal items work. I actually enjoy accounting more than tax because it's very current. It's very much a part of what the business is doing day to day. And I really like to be part of what's helping keeping the business going rather than telling them after the fact what they did right or wrong. So.
Yeah. I mean, you're obviously a big part of everybody's business because everybody's in business to make money, but they're also in business to save as much money that they made, their hard earned money too.
Right.
And there's a lot of different things I'm still learning. I mean, I learned something new with an accountant each and every year that you can save here, save this, and that things that I've never even heard of too. There's so many different strategies to save money on your taxes. And that's why obviously you're here today to start talking because you specialize in business, and obviously and being on the accounting end too makes you even more powerful at your profession as well, obviously. So hats off to you on that aspect as well too. you strive, I mean, you pride yourself on helping business owners pay as little tax as possible through, innovative tax solutions. So what are you doing there? Let's discuss this a little bit. Like, what different tax solutions should business owners be looking for? Obviously, this show is more construction related, real estate related as well. I have a lot of listeners that are realtors, builders, also clients that are looking to build or buy purchase houses. So what innovative tax solutions can you, or obviously you know them, so let's talk about that.
Right. So we also work with a lot of real estate professionals and with other people who are in the construction realm. I like to say most of my clients aren't very good at staying in just one lane. They like to have their hands in 100 little pockets. And if you know construction, you know trade, or you know real estate, then you all know each other. And you're like, well, if I can sell real estate, I can buy real estate, I can flip real estate, I can buy and hold. We're going to do all of it, because you have a natural correlation with that, which is true, where I can, I have 101 different people who do finance. I have 101 different people who do banking and lending and all that kind of stuff. So when we're talking with business owners, I feel really bad that the IRS and the US tax code is viewed as this real scary thing. I need to be real conservative on my taxes because I don't want to get audited. That isn't really a trigger for an audit if you are legitimately allowed to take that deduction. And I get that it is a little gray because every business needs to evaluate it for themselves. I don't like to see business owners leave that money on the table. And at the very least, if you're going to give money to a charity, you might as well get the deduction on next year's tax return. So how about we give you the money back, take the maximum amount of legally deductible taxes, help you really do a synthesized, very clean and very thorough job on what your tax deductions can be. And then let's go ahead and let you do what you want to do with your money. So whether you want to make it, whether you want to donate it, whether you want, whatever you want to do, that's up to you. When it comes down to real estate, when I'm first talking to people, I'm like, okay, let's talk about whether you are active real estate or not active real estate. That magic 750 hours a year makes you active real estate. And I like to say, if you have licenses, if you have the real estate license, that's a cherry on the top. But that 750 hours will take you from that realm of passive income to active income. So if you find yourself making a lot of money on your real estate activities, but it's passive, or you have a year where you're going to lose money and that passive loss is going to be carried forward for the next lifetime because you can only take $3,000 a year, let's figure out how to get you active. Let's figure out if this is a strategy you can utilize. Then we also talk about people who have buy and hold property. Even if that property is not commercial, doesn't have to be multifamily, have you looked into cost segregation? That is a great additional advanced depreciation structure that people need to utilize if they own property. Because if you buy a property and you go look at the IRS regs, it says, great, that property will now be depreciated for 27 and a half years. And you're like, everything's 27 and a half years. But you, as the person who owns it, knows that there are very few things that are going to last 27 and a half years inside that building. So a cost segregation study with an engineer, with an actual firm who helps you with those depreciation schedules is going to be a very good way to accelerate the depreciation on some of those items, such as tile or carpet and countertops and things like that. They're going to wear out sooner. You take that depreciation faster, and then when you replace them, you've already gotten your value for what you purchased the first time. So you're actually keeping pace with as those items wear out. So those are two of the major ones that I would say to look at. But then we'll have people who are like, well, I'm ready to, sell or do something else. Something's always happening in real estate where we need different strategies and we need to pair them with other things that help offset.
So we'll get into the other strategies to offset as well. So going back to what you said, cost segregation study, explain this a little bit more to the listener. Let's go into that a little bit too, because obviously that's 27 and a half years. There's a lot there to kind of bring together. Obviously we have limited time here too. Right. If we can crunch this all together and explain that a little bit more, because that was a huge thing you just said right there. So explain that a little bit more if you can.
It's funny. I actually had someone who was like, you tell them the strategies. And I'm like, if me telling you the strategy helps you do it all yourself, great. That's good for
Yeah.
you. But that's like someone giving me a book on how to do your own open heart surgery. Me being like, I'm going to tackle that.
Yeah. Yeah.
I highly recommend if you're going to get into advanced tax planning or whatever, find a professional, hand off that little bit of money every year that you will definitely make back in the additional savings the tax strategies bring you.
Mhm.
But create that relationship, create someone that you can work with and carry these forward. So, you can implement them yourself. You can get crazy on Google, but I highly recommend finding a professional to work with, me or somebody else.
I agree. I agree.
So cost segregation, it really is just advanced depreciation, which to you is like, you're like, okay, that was too many words right there. But for me, depreciation is something you're already doing on your tax return. You bought a truck, let's write it off. Section 179, advanced depreciation, write off. It's pretty much in that same category. But if you don't have a proper engineering study that's come in and go, this is what this building has, this is its actual useful life, then it's not going to fly. Even I don't go in and be like, oh, well, there's this and there's that. And according to the IRS schedule, this is where this lands. Let's go ahead and depreciate it that way. Nope. I still pay an outside firm to do a proper study, to do a proper engineering report for me so that I know that it is not only IRS audit proof, but it is nice and clean and it's everything that we want when it comes to that depreciation. Really critical if you have commercial properties and if you have multifamily. Those are the type of items where you probably find yourself going through assets a lot quicker than you normally would. But now let's say you buy this property and you're going to only hold it for like 3 years. You could do this advanced depreciation. You take all this depreciation. You have eliminated your basis, which is that thing that makes you not pay taxes. And so then you turn around and you sell it without doing the improvements. You might have put yourself into a pickle because now you have no basis to offset all the gain. We want to make sure that we're fully aware of all of your scenario and what's the plan. So this is where tax planning is much like a game of Jenga. You've got all the little blocks and each block can be like, oh, well, here's this strategy and it's a great strategy. Let me just grab it and pull it out. I'm like, yeah, but if you pull out the wrong one, you're going to topple your tower. So let's really look at how this is built and what is the best way to maximize tax deductions, wealth growth, all this stuff. So, it's a good problem to have. I like it when my clients get to the point where they're not afraid of taxes, where they're annoyed by them because they have a wealth situation to now focus on. And that really, truly is what happened. Is as you get up to where you're making a few $100,000 a year, where you're looking at $50,000, $60,000, $70,000 tax bills to the IRS, you're mostly annoyed and you want to use that money elsewhere. Let's figure out how to maximize your benefit. So.
And that's why somebody needs to hire somebody like yourself, because that right there is a lot of information. First of all, you're awesome. Thank you for that too. I appreciate that because that definitely, I know we're going to get a lot of information in a short period of time on this show too. So grateful to have you on here, but somebody definitely, I couldn't do any of this myself. I'll admit it too. And I'm sure there's a lot of listeners out there as well, because taxes are hard. And that's what we're here is to save as much money as possible and figure out reasons or ways to save as much money as possible as well.
Yeah. Unfortunately, the tax code doesn't seem to be getting any easier. Honestly, I vote for that group that would eliminate the IRS if we could, but
yes,
me and 4 other people. So, I would be totally fine not having a job if we could make the tax situation easier. But I'm pretty sure I have a nice solid career ahead of me, finishing out the rest of my life. I don't think the IRS is going anywhere, but it is not easy and it gets more complicated. And for businesses, there's all this gray and nuance, and every single business is different and every different lifespan of your business. There's the startup period. There's that, great, I'm making 100 to 150,000 and I'm very afraid of taxes. And then we're killing it all over the place. Like I got more income than I know what to do with, I had a guy one time that I worked with, and he had so much money that he had bought yet another case of wine that his wife was really annoyed. He kept buying cases of wine. So I'm watching him take $700 bottles of wine and he's like hiding them in cabinets so she doesn't get mad. I want to have that problem. Like that's a great problem to have.
I'm right there with you.
Right. So for taxes, it isn't easy. It's very gray. You need someone who's a professional. And honestly, if you're only paying a few $100 for tax prep and you only talk to the guy for a few minutes or maybe even an hour once a year, you're really not getting that, the kind of guidance and advice that you truly need to help, grow your wealth.
Yeah. And like I said at the beginning of the show, too, there's so many different things that I still don't know about that you can figure out that you might even be doing within your business that you can write off and have as a savings too, that you might be not utilizing somebody like yourself that knows these small things. The small things add up too, even though there's big things that people don't know of as well. So, and it's huge. It's huge to really look into also. I want to talk about also, obviously, you brushed on it a little bit. Let's go deeper into real estate tax savings. What are some savings real estate owners, homeowners, what strategies can they do? Let's start with, maybe just a residential, personal property or investment property. Let's go there because obviously homeowners with personal property, that's a little easier. We all have kind of our home we own and so on. So like investment properties and, because obviously around where I'm at, being in Florida, Airbnbs, stuff like that are just booming. More and more people are buying vacation rentals in that general area I'm at too. So what are some saving strategies there?
Right. So one, maximizing how much you can get for that property. I always see a lot of people, especially when they're managing their own properties, that they're maybe not evaluating the rental market and increasing their rents as they can. Or they're doing a long-term rental. They don't want to increase the price on that person. And I completely understand we all have like soft spots in our heart for certain people, but just know that if you're not also keeping up on the property and you're not checking it for damage, it might come back to have eroded some of your equity there. A lot of people, when they first get into their investment property, they're not going to see a lot of income tax impact annually on their tax return, because by the time you've taken all of your regular expenses, it tends to break even. I see it break even quite a bit. So you're in that game for the equity. And when people are like, well, I need to hurry off and pay off all my debt on my investment property, I'm like, why? Someone else is buying that house for you, really. What you want to do is pull that equity out, because something you can't do with stocks. If you buy a stock, that stock is appreciated 100% and you want to cash out on that stock so you can invest in something else, you're going to pay tax the minute you cash out. That could be in your high income years. That could be when you and your spouse both have great earning jobs. That's not a great time to pull that money out. Equity, you can refinance that house and pull out money. So you don't have to be in a very strong, like super a ton of properties to actually be seeing the benefit of that equity in a very short amount of time. Pull out 100,000, invest in another property, and now we're building our wealth. But let's say you actually want to sell that property. You don't want to 1031 exchange it into another property and avoid paying the gains. Now what do you do? So if you, like, I'm in Utah and our property prices have just gone crazy. So some people have seen their property values double. Well, if that's the case and you want to sell, you're going to make a decent chunk of change. You can look at something that is not a like-kind exchange that keeps you in real estate. You could actually look at a deferred sales trust. This is a product you can usually get with a financial advisor, and it allows you to take that money and invest it for a while, not a long while, but for a while into this other product that then basically eats the capital gains over time. It's kind of an easy way to say it. So that's one thing to look at. So don't feel like I'm going to sell this property, I'm going to pay this huge tax, I don't know what to do. So also don't think that you can get crazy with the whole, well, maybe if I lived in it for a few minutes, I'll be able to like take the homeowner deduction. That just gets dicey. You end up with it only getting part of the credit. So what I recommend is looking at what are the other legal ways to avoid those capital gains. But you and a financial advisor and us can talk about what is tax loss harvesting, what is some other things you can get into. You could even just go as easy as, well, I have these gains, how do I offset it? Let's look at an oil and gas investment. Let's look at, if you have a business, we can look at captive insurance. And people are like, what? I've maybe heard of this. Only rich people are in oil and gas. You can actually get into some of those for like $50,000, which when you've sold capital gains for a few $100,000, you might have 50,000 you could park for a few minutes and reap the tax benefits of it. So there's different things we can do. And it's pretty much just like Jenga, we're playing the game. We're like, okay, what's the best way to stack this? How high can we get this with as few pieces? What's the way this puzzle goes together? And it really is a matter of let's see what we want to do in the future before we act. And, I'm like hearing about the guy who was like, yeah, I just sold my property. I made a like-kind exchange election and I don't have another property identified. And I'm like, in this market? Like you don't, okay. I'm like, let me know how that works out for you. So it's like, let's plan and then act. So
I agree. I mean, I'm in a situation now, obviously the property I'm in has doubled. I bought during when COVID was just starting, and who would have known everything that's happening now was
this is not how I saw that going.
No. And being in the building world, I saw it going completely opposite, but now it's been crazy in Florida and where you're at as well, in Utah too. And it's just, and I'm in that situation where I'm like, okay, if I sell, but where am I going to go? Trying to figure out, okay, I can make good money, but then I'm going to have to put money in something that's lower than where I'm at now, as far as quality wise and so on, because the prices have escalated so much. Am I going to get the money back on the next thing I buy? So everybody's that's what you're seeing. I think a lot of this lack of inventory in markets too, is because people don't know where to go. They're not going to get something like they have for the money that they're going to spend, that they spent before. Yeah. So it's just,
well, and I'm in my 40s. I was looking at some statistics, and there was this thing that said worldwide and in the US that people over the age of 40 are only 40% of the population. So this younger generation who are now ready to start buying homes, who are ready to actually start families, and you do a COVID lockdown where you sent people home, of course, they're going to be looking for what's the best next place to live, because you look at those same walls for a little while and you get a little annoyed by them. So all of this next generation, there's just a lot more humans. We just need more housing. It's just a factor. We just have not been capable of keeping up with that demand. And now that demand became very strong. So as we start meeting that demand, if we go back and we look at what has been the trend with real estate, even if you're like, well, I have to buy something lower, I have to make sure that I have enough equity to build. If you're planning on being in that property for 10 years, I think you would be hard pressed to lose your equity. I think you would be hard pressed to not make money on that property. Like, please don't have any kind of like heinous crime or something committed there. Please don't you're in Florida, let's pray it's not a sinkhole. But if you're good, other than that, if it's a standard property, you're probably going to see your money go up. Much like the stock market, you will see your money go up. That you just kind of have to time when you get out of it. So like with real estate, if you see that market really cooling and you were planning on selling, know that you're going to have a harder time selling. So you're going to always want to avoid the downturn to sell. So balancing your investments, liquid with non-liquid, but the real estate's always going to be taking care of itself. There's always going to be a demand for rentals, if not ownership, for more properties. I don't think we see that going away anytime soon, because it's not like all these humans are magically leaving our country. They're here. All of us are, creating families, and all of us are continuing to grow. There's something to be said for buying and investing in real estate. I think it's a strong market in the future.
Yeah, especially with rental. I agree with, especially with rentals going up as well. Now the rental markets and prices are going so high to where, okay, now maybe you should think about buying a home and getting a mortgage on it, because it might be a little bit less than the rental and you're going to own something. Right. So,
and I didn't address your Airbnb comment. I should have. Working with professionals who are in the rental space, working with professionals who understand. There have been some tightening of where you can buy a property and turn it into an Airbnb. They have been wanting, certain cities are like, I don't want there to be all these short-term rentals hanging around with people all the time, coming and going. We would like to have like a more solid rental base, someone who's going to be a little longer term. So if you buy a property like I'm making it an Airbnb, make sure it's legal, because that will ruin your rental plan. But if you are going to do that, is there a time to invest with a rental company, with someone who's even an Airbnb professional? So I had a client who was an Airbnb professional renter. That was his business, was running the profiles and maximizing it. And he had a ton of rental activity. He managed multiple properties for just that purpose. So that is something that you can work with a professional and someone who's just kind of a niche in that market, so.
Yeah. There's so many of it now too. And especially around here, because it's obviously, Naples Beach, stuff like that. People are doing the weekly rentals constantly, and the amount of money they're getting for weekly rentals is just insanity too.
It really
crazy.
is.
It's crazy.
And unfortunately, I love Airbnbs. Like I stay in hotels and I stay in Airbnbs, and I'll take an Airbnb over a hotel any day. And so for the same money, yeah, you make really good money on them. They're a very good investment. But then you also have I just now have this like extra source of income. We're going to get back to that 750 hours. How many hours do you have to be working in your real estate side hustles in order to get them active so that you have some capacity to utilize cost segregation to write that off? So it's weird nuances and things that you can, like I had one lady who actually quit her job, became a real estate agent, so that the amount of activity she was doing, which was just shy of the 750, she's like, I want to be active in this anyway. I'm so close. And she got so many more tax benefits for it.
That makes sense. Okay. What about, I wanted to ask you, what about builders on the building end of things, like doing speculative home, like spec homes, and builders building investment properties to resell instead of custom homes for customers? How can a builder save tax there?
And in that case, a lot of times you're running a business. So the fact that your business is in real estate is sort of a like coincidence sort of situation. So because it's your primary source of business, we look at it as just a standard business. It's not going to be something, unless you're holding that spec home, that inventory for a really long time. The one thing there you're going to want to look at is how you're doing your accounting. Traditional methods are cash basis. Sometimes people will get fancy with accrual, but in real estate, we really want to look at, they sometimes call it work in process, WIP. Sometimes they're calling it almost like marking to market. I like to call it project completion, because if you have not sold, if you sold that property January and you spent all of the prior calendar year building it, then we should probably have the income and the expense match each other, because you were accruing it kind of like you're building inventory parts. You haven't actually expensed those items. So trying to mark your expense to your income, that will smooth your tax returns. Sometimes I've seen people who are doing pure cash basis and they're like, huge loss, huge gain, huge loss, huge gain. And the person trying to give them a loan is like, what in the world is going on with your business? And I'm like, I'm not really doing it right. If we kind of match that income and that expense up together like a nice little sandwich, it looks normal on a tax return. Then it looks like a standard business, which is what it is. So I would say doing that. But so if you're running a business, that's your primary focus, then you have some different things. That's going to be where we're going to pull out all the other strategies, our bag of tricks, which is going to be everything from Augusta strategy to hiring your children to, if you have very high income, are we talking about family endowment plans and some other things like that? I don't know if I got that strategy name right. Sometimes they run around in my head, but there are a lot of them. And this is where it's key to talk to you, understand your personal life, your business, your future, your goals, your whatever, so we can put that whole puzzle piece together.
And one thing I read on your LinkedIn, obviously you had tax saving strategies for architects and engineers. I know you were kind of targeting that too. So let's go into that, like tax strategies for contractors, architects, engineers, like anybody in the construction field. What are you seeing there as far as best strategies?
Right. For my consultants, a lot of the time, their biggest problem is they don't have any expenses. They're a guy on a computer who it's his sheer intelligence and his training, which is mostly what he charges a large fee for. And it's a computer, it's a desk, maybe it's some mileage to go see a client, but for the most part, he doesn't have a ton of expenses. What are ways that we can utilize that income? So not only is it getting him into, we've talked about some of those other, like either investment or in property type of deferrals, but trying to match your entire tax strategy to offset all that income. What are we doing with that money other than just either spending it or sitting on it? So that's going to be, we're talking oil and gas, we're talking captive insurance, we're back to Augusta strategy, we're back to hiring kids, we're back to looking at all those other plans. Sometimes we're talking about you have such high income that maybe it just makes sense to put money into things that are not tax advantaged, like a whole life policy. Personally, I think whole life policy kind of makes garbage insurance, but it makes a great investment tool. When you're talking $50,000 to $100,000 annual premium, you can put $1 million in and see a $2.5 million personal line of credit to you as you need it, because you can lend against your own money for years to come in the future. So seeing how these other things, you're like, wait, then what did I do with the 2.5 million? I think we'll find something to invest in that 2.5 million in, right? So for architects, engineers, for people who don't have a lot of expenses, this is where using the IRS code and knowing those other expenses you're not aware you should be taking. So, or should you be buying a building and making sure that you are making money off of, where you need to have your office? We need to be making sure that not just using the old, I'm going to go buy a truck so I can write it off. Actually run those numbers. If you're not making more than 8 or 10% on some other alternative investment with that cash, if you don't need that truck, don't probably buy the truck. I don't seriously love that. I think that's kind of lazy CPAing, because then you just say, oh, well, I look good, you saved money, and we're great. I like to make it complicated, I guess. So,
yeah, I mean, making it more complicated is obviously equals more savings. So.
Yeah, I mean, really, this is where when you first start out, everyone probably started out as a sole proprietor. You filed your Schedule C. It was with your personal return. It was pretty easy. You probably could have done it yourself. You had TurboTax. But if you're really going to win at the tax game, if you're really going to win at the wealth game, you probably need to bring in some people who are professionals and can really help you strategize that. Either that or you have to spend a lot of your own free time researching it, understanding it, and making all the right moves alone. And then you have to ask yourself, what is the best use of my time? Turns out I'm really good at accounting and tax, so I'm going to go ahead and stay in this realm. I don't quite love the whole stock market situation. That's way too much for me, so I don't get into it. So I'm trying not to get interested in just exploring crypto simply for the whole, exploring it. It's kind of like going to Vegas. I'm like, I don't know that I don't want to do that. So, sometimes you just do dumb things, but I think it's worth exploring because there's opportunities in everything if you kind of are willing to listen to other people's experience.
Yeah, that's kind of the way I am. I explore everything. I'm in quite a bit of different things. I'm even in sports cards, so there's another investment there.
Entrepreneurs, they cannot help it. They absolutely cannot help it. Every single one of my clients, that's where when we do our pricing on our tax returns, I'm like, I have one price for individual and one price for business. Why? Because if you're not complicated, you probably don't need me. And if you're complicated, you're complicated. When you are.
I'm in that complicated category because with crypto and sports cards, I have some sitting right here because I have a business there. And then, there's, right. So I'd be your complicated client.
Right. Some people just like to expend money and they just I'm just going to go buy stuff. And other people are like, I can't not want to figure out how much I can make on this. They just want to see how much value and how much, just leverage and just everything. We're just always playing with things. We're always just trying to make it a little better.
That's the way I am. Yeah. I just want to see where it can go, what I can do, where money can go. And I'd rather have money in something that can grow rather than just sitting. That's kind of how I am too. So.
Right. But like you said, you're even something that's supposed to be fun, you'll figure out a way to make it a business kind of a situation.
Yep.
So.
Yep, exactly. Another topic I wanted to talk is like first time home buyers. Obviously, there's listeners out there that are thinking they're renting, then they're thinking about buying a home. So tax savings as a first time home buyer, what can you do there?
So it was far more lucrative before the 2018 tax changes. So primarily because, and so if you're a millennial, we apologize. We took away all the fun. I got it in the heyday. So because we made the standard deduction $12,000, pretty much that means you're going to have a decent chunk of real estate mortgage interest plus property taxes plus state income tax to get over the 12,000, and then those dollars over the 12,000 are a tax benefit. So honestly, if you're getting into real estate, whether it's your own home or it is an investment property, you're in it for the equity because you're already getting $12,000 free from the government to take against your taxes. So if you don't, your main reason, not only is that equity growth one of the best ways to grow wealth, it's an easy way for you to use something you're already paying for every month, get into the property. Where I will hear people talk about, they're like, well, because after I've spent so much money fixing it up and maintaining it, it doesn't make sense. I pay more than I would for rent. I'm like, true, but you've added so much value. I refinanced my house, took out and spent $100,000 already on nothing but mechanical stuff. It's a 1970s home. And so, but that is going to just make my home that much more sellable for decades to come. Mm-hmm. So it was a worthwhile investment on my part, even though it annoyed me because none of it's for the pretty stuff. So getting into first-time home buyer, getting into properties, your main thing here is that first property, you'll leverage that equity for the second property. You're going to be that guy who's like, I am going to figure out how to buy a condo. Maybe my dad will buy it with me while I'm going to college. And then I'm going to have two of my, dirty friends who are going to just trash the place rent with me. But they're helping pay for this mortgage. I'm getting the equity. We'll then maybe keep this property as a rental while I move to my next one after I get married. You already have more going into it than people who wait until they're almost in their 30s. So trying to get into a property, even if the first time one, do it for the equity, make that smart decision, know that your tax advantage is, it's not bad, but it's not great. So.
Yeah, I like that strategy too. Like as say you're going to college or whatever, because you don't think of this stuff. First of all, you think you're just going to go to college, pay rent, whatever, have a good time, party with your friends, and so on. But to do the strategy you just said, buy a condo instead of do it as a rental, have your friends pay the rent too, maybe even have them pay enough to where you live there for free. That's smart, and that's getting you ahead of the game.
I had one dad who was like, he really wanted to do this. He was going to buy a property wherever his child was going to school. He's like, I am not paying 12 or 15,000 to the school for housing when I can be making the equity. And so his problem was that his daughter wouldn't decide where she would go to school. So she finally makes a decision. He ends up buying a property there. She changes schools the second year. He's like, I'm going to have properties all over the US. He's like, she can't just go into college. But he was still able to keep utilizing these as investment properties because it's a college town. I happen to live about 20 miles from a college town. We have two colleges here in central Utah within pretty much the same city, and they're like neighboring cities. And so rentals are just an unbelievably good find. Like there's never really a bad market for that. The economy's cruddy, go back to college. Economy's great, go to college. Huge generation boom, go to college. And so, our county has gone from 600,000 to almost 1 million people. We need more college. So you're never going to have a problem with properties that are near schools or that are just a good place for you to start out your living. And house hacking, I think that's what they call it when you rent rooms in your own house. House hacking is a great way for you to learn how to leverage that property. You just need to be able to get into it the first time. So, be careful if you're buying with friends or something like that. But if you and a family member will leverage that together, because even me, if I'm buying with family, even if I have to take that property away from you, which would be awkward, there's still equity in it. So
that's smart. Very smart. One thing I wanted to ask you too, and I heard about this, but I just want to hear your opinion on multi-entity deferral programs. I don't know if you've heard of this. Is that something you know of too?
Multi-entity. I
Yeah, which
probably know.
it allows your clients to determine for themselves how much they want to pay in tax each year. I heard this on a
Yeah. So what I think is happening there is that sometimes like we'll have a business, and rather than just going with the classic, hey, let's make you an S corp and pay you a reasonable compensation, which the IRS requires, and then the rest of it's pass through income. Perhaps there's a scenario where the husband and wife who ultimately want to own this company, they're not actually the owners of a partnership that owns their business. They have S corps that own the business. So now they are paid a salary from the business. They have S corps that own them. From their S corp, they're receiving just the pass-through income. And now within their own S corps, there's no business to get muddled into the scenario. We're actually able to, on each individual taxpayer, figure out what those investments need to be. So I think that's kind of what we're doing. We do have a lot of scenarios where it makes a lot of sense to complicate your tax situation further by having multiple entities or entities that own the major entity, stuff like that.
Okay.
So you do it a lot for asset protection. You'll see that in real estate. One LLC owns that asset. So this way, if anything happens, if a lawsuit comes down, you're not exposing your entire portfolio and all of your wealth holdings. But then you're also able to change where the tax decisions need to be made. Because sometimes what is good for like a tax savings can be bad for the business, or it's not legal. So by diverting where the net income of this business is flown through to this entity, you have a little bit more control when there's less parties involved with it.
Okay. So let's go even crazier now. Some things that people would never even think of, tax savings as far as on their business and real estate end, or clients, that are building a house, or just life in general. Let's go outside the norm. What are some things that I wouldn't even think of that, that somebody, because I know, like you said, the tax code is constantly it's changing and it's getting more difficult. So what's something that somebody wouldn't even think about saving on?
One of the things that I don't think it's out there, they've heard about it. You'll probably hear about charitable remainder trusts, and there's another name for this, like a kind of an investment. So basically it's you saying, hey, I have X number amount of assets, and it's typically going to be a higher number. We're going to see $500,000 or something. But I'm willing to pick a charity and give this money to the charity upon my death. And during the course of it, I am actually investing that money, and I am seeing proceeds that coming back to me to manage it. And I am seeing basically a cash flow from it, but that is a 100% write-off. That is a huge charitable investment. But that's one of those things where you're telling people, I'm like, who wants to leave a cool $500,000 to charity? Like even the most pious person's like, I need to pause. I need to think, because that is like, what can I do with that $500,000? And this is where all the scenarios. So that's one of those weird, like high wealth kind of scenarios that is an option for tax savings, but you really want to kind of think about what's going on. Mm-hmm. We also talked about like a family endowment plan. This is where you're like, I have $1 million in assets. Let's put this money into this, and we're going to manage the entire like family of assets that are going on, like everything your family is accumulating. And it can be done. It can be complicated. It has there's trusts and there's other things involved. So that's where, can't be afraid to get the financial advisors involved or the attorneys involved. That will be the kind of that fun stuff. But and I think one of the best ones, it's actually kind of I don't want to say it's an easy one. The devil is in the details on this, but go look up Augusta strategy. Cool story behind it. But then also just seems like it's something that a lot of business owners can implement in their business. And it comes down to making it legit and making it, doing it right. But we'll all make, so sometimes those are easy habits to change. It's not asking you to like cut out something crazy like coffee, but it's asking you to go ahead and make a small change that'll benefit you in your business, pretty decently. So.
Yeah, you've brought up, I'm definitely going to look up Augusta strategy. You brought that one up a few times today. So that's definitely probably a big one.
It's actually tied to the Augusta golf tournament. I kind of love the story. Like you don't really get a good story. So I kind of made up this whole scenario on how this happens in my head. But it really is one of those you're like, is that legit? Like, is that really? Did they do that? It's tax court tested. So this is where, if you want to see the tax court cases, if you want to know how to do it right, talk to a good CPA. For CPAs, like, I don't know if that's legal. He doesn't know about it. It's not something he got into. We do a
Hire
ton of
somebody
training.
else.
Yeah, we do a ton of training on that. In fact, when people call me, I'm like, we do business taxes. Like, so like if you don't have a business, if you don't have a business or a complicated wealth management, like investment scenario, real estate scenario, we're probably not the firm for you because it's overkill. But for the same reason, you don't want that guy who's like, oh, well, he does it for the side, but he does it for such a good rate. And I'm like, you're getting what you pay for there. So
Yeah, it's just listening to this. I mean, obviously, it's showing the importance of hiring somebody that knows what they're doing too. And if somebody, like I said, if somebody doesn't know that strategy, they should probably know it, especially being a business tax strategist too. So if they don't know it, you might want to consider somebody else like yourself. That's why you're on this show. So, but I'm going to hit you from all different directions with this because we're trying to cram a bunch of stuff that this show could probably go for hours and hours. Coronavirus, obviously, tax savings there. I know there are savings. There's not a lot of people that know what they are or what you can save from coronavirus. So, what are any kind of tax savings or incentives that people need to know about the coronavirus and what we went through with the pandemic and so on?
So I hope you had jumped on board with the whole PPP payroll protection program loans, and you were able to get your money, were able to get it forgiven, but that has closed. Then there was EIDL loans. I do believe your ability to apply for those is finally closed at this point, but it was another good way to extend it. What you might want to look at if you do have an EIDL loan, the economic impact disaster loans, they were issued by the SBA, is if you've got one, are you eligible for an extension? They were sending out emails allowing you to ask for more if you felt like you were like, oh, we're actually rebounding. Let's go ahead and go. Most of the additional savings, unfortunately, lies with clients who were really actually impacted by COVID. And unfortunately, in the trades and in construction and in service-based industries, I didn't see as much economic impact because we were all still working. Like I'm working at home, but we're working. And so real estate, you were like, fine, y'all go home and we're just going to do what we're doing. And that was primarily so if you were doctors, if you were lawyers, if you were restaurants, those types of people. So ERTC credit is employment reduction tax credit, I think is what it's called. You can actually go back, if you have not taken ERTC credits, you can actually go back up to 3 years and get those credits refunded to you. And it's actually cash refund. So basically what it is you saw a vast reduction in your sales, and you probably either kept employees longer than you could probably financially afford, or you did have to let some people go and then hire people back. So if you've had any if you did see impact, at least 1 quarter's worth during COVID, it's worth getting an ERTC evaluation. There are very specific firms who do that. I actually don't do ERTC evaluations, but I have a really good friend who does both R&D tax credits and does ERTC. So that's the other thing. If you're in a weird niche industry, there's not too many more in construction that we haven't mentioned. But if you are into software, if you're into hardware development, if you're engineering who are like creating processes, not just products, and you're investing a lot of time and money trying to get those off the ground, R&D tax credits need to look into them.
Okay. Yeah, because it's interesting. I mean, there's not a lot of people that think about that too. Obviously, with construction, we were open as well. There wasn't obviously really much slowdown, even though we thought there was going to be too. So, it's it was a unique situation for us and the construction. We just kept going to work. Yeah, there was people that might have had, obviously we were, stayed kind of, safe, and we had our regulations that we had to abide by too with the, workers and so on. But it was a unique situation too.
Right.
So what about, and obviously hiring the right CPA too? We talked about that, and picking a CPA is one of the best investments you can make. We spoke about this for yourself and your business. Obviously, it should be treated as such, no matter what. What are you doing to stand out from the rest of the CPAs in your area or around the country? Like, what are you doing to stand out?
In our case, I think like a lot of industries, we have become a very expert kind of industry anymore. So we can't really be a jack of all trades.
Yeah.
We have become very niche specific in the type of not only all of these tax credits, but the accounting that we do for businesses that are utilizing these tax credits. That's not something that's easy. Like I can't even just hire someone who's even half heard of them. Even half of my employees have never even heard of these tax strategies. So now I've got to teach them how to use it in the accounting and how to make sure that all the records are accurate. So when we are working with clients, our very specific training, our very specific experience, we stay in that lane and we are just very clear. I mean, I don't generally work with clients who have like product-based businesses because I'm not into all of your sales tax and international sales tax and all of these other problems. And so that's just me stepping outside of where my expertise lies. So I'm just very good at trades. I'm very good at service-based businesses and very good with people who have a multi-entity wealth management kind of situation. We have clients who don't even live all the time in the U.S. I have one client who splits his time between a South American country and here because his wife was born there. They have a child and they want to see her family quite a bit. And so as he's coming back and forth, we're working, we do CFO and we do other services for him. So as we are providing all these services, we work with his schedule. We work with all the different variety of problems that might come up into his tax scenario and help guide him along that path. So someone who is in line with you, but there are accountants out there who are like, we work with this industry, we work with that industry. And so if you have a scenario that is very specific, you might find an accountant who does exactly what you do.
Yeah, I like that because there are accountants, I've worked with them in the past that kind of just hit on everything, but I like how you said keeping it within a specified area because each business is unique to itself too. And a product-based business, like you said, or somebody that has a store is completely different than somebody that is running a construction company,
Right.
So we need somebody on the construction side that knows what we go through on a daily basis and what we deal with as far as costs and so on, and who can save us the most money or keep the most money in our pocket with a lot less aggravation.
Yeah. And if they change rules as it applies to your particular industry or the strategies that benefit your industry, you kind of want to know that we're caught up on that. A few years ago, there were opportunity zones were a thing. You had to go buy your own building in like the middle of a bad area and decide you're going to renovate it for the matter of revitalization. Well, now you can just invest in a fund and other people are doing it. So you don't have to actually go get into the middle of your own, inner city rebuild. So there's a lot of different things that are constantly changing. And so we're in touch with all of those people and all that training and all of that, the changes that come through our industries.
Awesome. Well, like I said, Lisa, we can go on for hours on different strategies and so on too, but due to showtime.
I was going to say, typically I get to about an hour, maybe an hour and 20, and then people's eyes glaze over and then they're like, I can't, we're done. So,
well, I can go on for hours with this because I'm always interested in this stuff too. And I know listener, why people need to pay attention to this stuff because obviously it's your livelihood, your business, and more money in your pocket as well. That's how important you are to any business in this in this world. So you're very important. That's why I'm happy to have you on. But I do always end the show like I want to get into personal questions. One question I love asking, this is one of my favorite questions. I did a little series on this with my social media. What about you personally? You've built and been a part of an amazing company, and your brand continues to grow each and every day. What lessons have you learned throughout your journey that we should all apply to our own business or our own lives that can help us grow?
Right. So I've grown through businesses, and I always start out because I like to be a little bit of a micromanager. I have a plan. It's going to go like this. This is exactly the business I'm going to grow. And life starts deviating you into a specific type of thing. It's like taking you where you need to go. And if I was going to resist that, if I was not going to take on the willingness to change my path, to step back and to see what was being presented to me, and to actually look at all these opportunities as opportunities, then I would be, a little bit, I would have shortchanged myself. So very early in our business, we're like barely moving along. My business partner and I had started to attend, and we were just going to be your standard CPAs. We're just going to do tax prep and do some little baby accounting. It's not a big deal. Weren't going to charge a lot. We were just going to, do a great job for everybody. And that wasn't resonating with our local clients. That wasn't resonating with most of our prospects. And we kept getting people asking us all these hard questions, all these hard things. I heard about this. My friend said this. I heard about this. And we started digging into it. And we get these opportunities for this training. And my business partner, Gene, goes to one of these conferences, and he calls me at the end of the weekend. He's like, so I did a thing. And I'm like, okay. And I'm like a thing you have to explain more to your wife, or a thing you have to like, he's like, I invested in this program that is like $30,000 a year. And I'm looking at it, and I actually pull up our profit and loss on QuickBooks right then. And I'm like, we've only done $52,000 in sales so far, right? Like the whole investment to profit was not really there. And he's like, I can afford it if it fails or whatever. And it paid for itself in like 3 months. So that's the kind of scenario where old school Lisa, who is very like conservative, initially I wasn't wanting to take that, but I quickly saw there was a reason why this opportunity kept coming about. And we were really good at it. And it was it's our fit. It's our niche. It's where we fit. We're a team of 7 now. And you either are like with us or you don't get it. And so, but with every client who needs that service, the services just click. It's just, we're those people you have to talk to every quarter because you have such a scenario going on. And everyone's like, I don't ever have a relationship with my accountant. And I'm like, well, we're not cheap. We're not cheap. I will tell you that, but we're not crazy expensive to the point that we don't make sense. Everyone stays with us for the relationship. So
isn't that crazy how that happens though, where you just don't expect it, and the most uncomfortable thing of changing, your comfort of where you were, and then doing that $30,000 investment that changed, or 30,000, right? And then changed everything into where you are. And now you have 7 employees and so on. And we operate our business the same way. We're not the cheapest, obviously, but we deliver the best quality we possibly can.
Right.
And that's what I got from you with what you're saying as well. But it's just crazy how things happen and how you find the right place as well.
Yep. So when those things are there, like the willingness to explore them, and then something that isn't working, no matter how much you're trying to shove that square peg in a round hole, if it is not working, stop and decide if that is really a thing you need to keep pursuing. So that's 25 years in business. I see it for clients and I see it for me. So
love it. Another question I like to wrap things up with is people ask about your past. Let's talk about your future. Where will we see Lisa in 10, 15, 20 years from now? Who will you be?
Hopefully in 20 years, as I'm 65 years old, I will be probably getting close to retiring and enjoying some of my own wealth management there. But I think it will be someone who is hopefully still tech savvy. Oh my goodness. That is like like I have nightmares about not knowing how to use tech one day. I don't want to be that old person who like can't turn a computer on. And so I'm like, no, you have to keep learning all the things, like, keep knowing how to click all the buttons. And so then I also hope to be someone who still is staying on top of current trends. And is encouraging other people and helping train other people. I really enjoy that training and encouraging aspect of the younger generation, so that they can continue where we're at, but also learning from them. So probably being a good trainer in my company, and also being someone who is still trying to stay relevant. So,
well, you will have a job forever in training, because tech and trends never stop. And with everything that keeps coming out with crypto and metaverse and all this stuff too, it's hard to keep up with. And I want to be that same person as you, where I know how to punch the keys still and figure it out, and because it's changing.
It's like real estate. I'm so absolutely fascinated with all these new changes, especially I think real estate and construction, when they start to really grasp all of the eco advancing type of tools, whether that's passive house, whether that is like all these different building trends, when you guys start to really grab onto all of that and take it forward, that's when we'll see all of our world change. When we talk about how much energy leakage comes from commercial buildings, it's like, we can do that better. It's like, tell a construction guy he can't do it better. He'll have that thing re-engineered in 5 minutes, and he'll be like, oh, no, you didn't. So that's just where this constantly growing and trying to be a little better than we were yesterday. I think that's where every business likes to see themselves.
Yeah, and I agree. And I think we're going to start seeing those trends more and more. It's slow but surely, just because cost and so on too, and getting the people to spend. Sometimes you got to spend more to get these changes as well, because they are higher to start.
I've seen some of those where they're like, it's more expensive. But then if you were to like factor in energy, I think also it comes down to when we're so busy, just really literally running on the treadmill, to stop and to want to make major changes like that, to take that huge investment in about face. That's not something most people want to do when you have a sure thing right there in front of you.
Yeah.
It's just at some point, if you start seeing it's like binding you into a corner and it becomes this thing over and over and over again, people keep asking for it, then you're like, what are you trying to tell me, life? So
well, funny how that works, right?
Funny how it works.
Another question I've been asking is, and this will kind of put you on the spot here, is there something we didn't talk about today in this show that you think is important for the listener that we should discuss?
I think that if you are the guy who's listening, he's like, I'm not big enough for that. I am not there yet. I am just barely starting out. I'm just one man. Even if it is a standalone CPA or an EA, someone who just doesn't really specialize, but you don't feel like your tax scenario is difficult and cost is most important to you, professional tax prep, I feel, is a very good insurance policy against extra IRS review. Those forms are not easy. Also, if you like to buy a software and you like to DIY your own taxes, my experience, my personal preference is that for personal taxes, W-2s, whatever, great, go for it. I don't care. If you are looking at business stuff and you're clicking the bubbles that are asking you questions and they're telling you no more than yes, that's probably because they're not in the habit of getting anyone audited. So how about you go and ask for another opinion? You probably get more in refund. So, or at least in allowed deductions, because the little bubble on the software isn't probably giving you a thorough review. No. So if you're the new guy, just find some tax prep. It's a good investment for a few $100s a year. Go ahead and find that. And then when you're ready, and if at any point you want that free consultation, jump on my Zoom call. You can find that on my calendar. And so on my website, if you click my set appointment, it comes to my calendar exactly. And you get me for an hour and I'll pretty much answer any questions because I'm a nerd like that. So I would just say, if you're that small business owner, just be willing to ask questions and to find professional help. So
Yeah, that answer right there is 100% right. 1,000% investment should be made in somebody like yourself, because I don't know how people don't do it, to be honest with you.
and sometimes it's not a right fit, but at the very
Yeah.
least, invest in the knowledge, invest in the conversation. Let us start getting it percolating to where you're like, when I'm ready. I actually had a person I signed up as a client this week. We've talked twice before and it wasn't the right time, but she was still willing to come back and have that conversation because it wasn't about, any kind of fear of inferiority, or that it wasn't that my price at the time wasn't a good fit. She saw that there was a need there. She just didn't need the need right then. So, but she's like, I will one day. I'm aware of what's coming. And so she was just making herself knowledgeable about a lot of things. So, you don't have money, go talk to a financial advisor anyway. You don't have money for a rental property, still start researching it and go talk to a real estate agent who's in properties anyway. One day you'll be the last one to realize when you're ready. Other people probably see it before you do.
I love that. Yeah. I mean, asking questions, just figuring out, because one day you're going to need it. And it's just thinking about it now, planning ahead is very important. I mean, I've been guilty of delaying certain things. I just hired a financial advisor, so which I didn't know how important that was, which is, leads you to different things and avenues that you need too. And I never thought about it until I got around different people that had one and talked to me about it and so on too, and ask questions. That's a thing too. So very important.
I think this is why coaching is becoming such a big thing, is that when you find someone who's knowledgeable, it's like this mentor trainer idea that all of us are starting to, as business owners, kind of glom onto this idea that, hey, we need to go have smart business discussions with other business people who've either done it or are looking into it. And what are people finding? Because that whole just head down, doing the same thing all the time, like not trying to look into other things, it doesn't get us as far as we need it to. So,
yeah. And on the coaching end too, it's a lot easier to do it and get access to other people now. Like we wouldn't be sitting here if it wasn't for Zoom and being in front of each other and so on. And this is coaching and teaching people too. And it's just the access to people that have done it and built businesses before is a lot easier, but you have to ask, and a lot of people just don't ask. They stick to kind of what they're doing, set in their ways, but that's not growth. You're not going to grow unless you learn and ask and meet new people and have the conversations you need to grow your business and yourself and so on.
Right. So. It's like I do networking. I went to a networking just last week. It's middle of tax season and I don't really have time for that. But at the same time, I don't have time to not do it. So,
Yeah, it's very, very important. Last question. That's what this show's all about, is what exactly do people need to look for when hiring a CPA, and why should they choose Lisa Bloomfield as their CPA of choice?
So if we get on this Zoom call and we're talking and I'm saying the words that you want to hear and it's resonating with your business problems and you can clearly see this is something your business needs, that is then a reason for us to continue that discussion or to move forward with working together. But if you aren't sure that you're resonating with me, but you like some of the words that I'm saying, then you're going to want to find someone who's also doing what I do. There are people out there. In fact, half the time I'll even give you their names. So, because I can tell when I'm just not a good fit for someone for whatever reason. I have some people who are like, you're in Utah? They're like, why am I talking to you from Tennessee? And I'm like, well, I'm very good at marketing. But it's very funny, the number of people who think I'm in their hometown. I'm like, I'm not, I'm in Utah. So, but if they really want me local, I'm like, I probably know a guy. Let me find someone who's the closest to you and let you know. I'm happy to share that because I want someone to find someone who's good. But I don't ever love to see people stay with someone that they don't resonate with, or when you're not networking, when you're not talking to other business owners, you're like, what attorney do I hire? I don't even know how to evaluate them. You probably want to go ahead and at least search on the internet to get some basic ideas of like, what should be in my contracts? Why would I hire an attorney for this real estate transaction? What do I need to look for in, even like I have a friend who does both title and he was a real estate attorney. So I'm like, win-win, like he's super smart like that. So finding asking those questions and kind of understanding what other people's problems are, why they choose somebody. But honestly, I think if you ask people who, if you like what they are doing and you think that they have like a business that you would like your business to be, ask them where they use those services. What have they looked into? So that's going to be a good way for you to find a shortcut to what you're looking for. So.
Awesome. Lisa, this has been awesome. Like I said, we can go on for hours and hours, and because this all this stuff intrigues me. It interests me because any way to save money and not give away your hard-earned money too is it should intrigue everybody, right, to be honest.
Well, I think you know how to set an appointment with me from my website, so you can go ahead and anytime you need to just ask me all the questions, but you just let me know.
I love it. I appreciate that. So just off that, where can people connect with you, find you, social media, just so people know, the listener, and I'll share links as well.
Right. So you will find me on Facebook, Lisa Bloomfield. That will lead you to my LinkedIn page. Also under that, our business is Wasatch, which is spelled was-at-ch. Honestly, if I'd have known we were going to be so nationwide, I probably would have picked a less difficult Indian word to say because it's our local mountain range. So Wasatch CPA Services. But if you are looking for me, I am not the Orange County professor who teaches art. I am the, CP or the accounting firm, the accountant, the whatever. I'm actually technically not a CPA, FYI. I hold my master's degree, but when I did government accounting, it was a weird conflict. So I am actually taking it now. So I'm 45, taking the CPA after 10 years, and it's lovely. I got to tell you. So, but I don't honestly find any questions I haven't ran across before. So it's more like solidifying what I know, which is nice. That's nice. So it's not really surprising me that much.
Yeah, I'm sure there's plenty of questions that you get asked all the time too, especially in your field. So
when you do it, and I'm one of those people who's always like, that's an interesting concept. Let me go look that up. So like if I ran across something, I want to go know more about it. I can't just pretend you're like, oh, I don't know, and then ignore it. I just have to always be asking questions.
That's a good thing. That's a good trait to have, and especially in your field too. So definitely.
Yeah, definitely.
But Lisa, this has been awesome. I really appreciate your time today and you taking the time to come on. I know it's a very busy time of year for you right now. So I obviously thank you for your time today. It's been awesome.
Well, thanks for having me. Awesome job you're doing with the podcast. And to everyone who's listening, hope you have a great 2022.
Yeah. So. And for all of you that are listening too, like I always tell you as well, please subscribe, share this with your friends, family, and also 5-star reviews only allowed on iTunes, and write a nice little comment, say how awesome the show is. Take you 2 seconds. Thank you for listening, and I will see you guys next time.